welcome to the Deep Dive. Today we're looking at something pretty useful for businesses. The business line of credit. It's all about flexible cash flow and growth.
Exactly. We've got some notes here based on info from Joe Starcher Funding that really break it down.
Right. So the basic idea, it's kind of like a credit card for your business, isn't it?
That's a great analogy, yeah. You get approved for a certain limit, let's say,
Okay.
and then you just, draw funds as you need them. You don't take it all at once.
So if I get approved for, I don't know, $50,000,
Right.
I could pull out maybe $10 this month for inventory.
Yep. And maybe $5 stay next month if things are a bit slow. You only borrow what you actually use up to that $50 ceiling.
And the key thing is the interest, right?
Yeah.
You're not paying interest on the full 50 grand.
No, absolutely not. Only on the amount you've drawn out. So in your example, just on that $15,000 you borrowed, that's it.
Okay.
And then as you pay it back, that credit frees up again. It revolves.
That seems like a huge advantage, that revolving aspect.
It really is. It means you don't have to keep reapplying every time you need a bit of capital.
Yeah, that saves time. So benefit number one is definitely that flexibility. Access when you need it.
And paying only for what you use,
Yeah.
much more efficient than a big lump sum loan you might not even need all of right away.
Makes sense. What about business credit? Does using this help?
Oh, absolutely. That's a really important point they make. Using a line of credit responsibly, borrowing and paying it back consistently, it really helps build a positive credit history for the business.
So it's not just about the immediate cash, it's a longer-term play too.
Exactly. It shows lenders you can manage credit well, which can open doors to better financing options down the road.
Okay, got it. And cash flow management, that seems like a big one too.
Huge. Think about seasonal businesses,
Yeah.
Or just waiting for invoices to get paid. That lag can be tough.
Yeah, waiting on payments can really squeeze you.
Right. A line of credit can, bridge that gap, keep things running smoothly. Or, let's say, an unexpected opportunity comes up.
Like a supplier offering a discount.
Precisely. But you need cash now. This gives you the agility to jump on it without messing up your regular finances.
So what are some common ways businesses actually use these funds? We mentioned inventory.
Inventory is a big one, yeah. Stocking up without draining all your working capital.
Makes sense. What else?
Covering payroll during slow times is another. Or, say, emergency repairs. Your main machine breaks down.
Oh yeah, that could be critical.
Definitely. Also, things like marketing campaigns, advertising pushes.
Investing in growth, basically.
Right. Or even expanding, maybe testing a new product line or moving into a new area. And back to that invoice gap we mentioned, bridging that time between sending the bill and getting the cash.
That lag seems to be a recurring theme.
It's a major pain point for so many businesses. So apparently these lines of credit are really popular, highly requested.
Because they're versatile and quick.
Yeah, relatively quick access, easy to manage once set up, and just super flexible.
Now what about getting approved? Are there basic requirements?
Well, the source we looked at mentioned some typical starting points. Things like your business being operational for at least 6 months.
Okay, so not brand new startups necessarily.
Generally, yeah. And having a certain level of monthly revenue, like maybe $10,000 plus.
This is a baseline indicator, I guess.
Exactly. It gives you a rough idea if you're potentially in the ballpark. Lenders will obviously dig deeper, but it's a start.
Okay, so wrapping this up then, a business line of credit offers flexible, revolving access to funds.
Right. You borrow what you need, pay interest only on that amount, and it can really help with cash flow, seizing opportunities, and even building your business's credit profile. It's different from just getting one big loan.
So for everyone listening, maybe think about this. How could having that kind of ready financial flexibility, even for smaller needs, change how you operate?
Yeah, how could it help you navigate the unexpected or maybe, grab hold of that next opportunity faster? Something to consider for sure.